Hello friends, today we are going to talk about one of the heaviest, most detailed, and most trusted chart pattern encyclopedias in the world. Thomas Bulkowski's Encyclopedia of Chart Patterns. This is the book that didn't just give names to chart patterns, it revealed the math behind them, their success rate, their failure rate, and their actual performance statistics to the world. Where other books explain chart patterns like simple drawings, Bulkowski manually studied millions of charts and created scientific data that tells you which pattern actually works and which doesn't. Today's video is a power-packed, research-backed, longest audiobook-style summary of this book, so that you don't just recognize chart patterns but learn how to trade them scientifically. What is the real purpose of chart patterns? Bulkowski says that chart patterns are not just lines, they are the story of price and psychology. Every pattern shows the strength of buyers and sellers, reveals the breakout direction, gives clues about how far the price can move, shows signs of failure or fake-outs. Chart patterns are like the language through which the market speaks using candles. If you understand the language of candles, the market opens up right in front of you. Thomas Bulkowski's research philosophy. Bulkowski calls charts emotional footprints. He believes that price never moves randomly. It moves because of behavior. That's why he manually verified more than 10,000 patterns, documented percentage rise, percentage decline, success ratio, failure ratio, throwback, pullback, breakout time, and overall probability for each pattern, wrote the statistical truth for every pattern. This means the book is not subjective. It is fully based on scientific measurements. Continuation versus reversal patterns. The base structure. Bulkowski divides patterns into two major categories. 1. Reversal patterns, which reverse a trend. Examples: head and shoulders, inverse head and shoulders, double top, double bottom, triple top/bottom, rounding tops/bottoms, broadening patterns, diamond patterns. 2. Continuation patterns, which push the existing trend further. Examples: flags, pennants, triangles, ascending, descending, symmetrical, wedges, rectangles. Reversal patterns show that the trend is exhausted. Continuation patterns show that buyers or sellers are still strong. Understanding both is a powerful weapon for any trader. Breakout psychology, the real heart of any pattern. Bulkowski says the real magic of a pattern is in the breakout. Forming a pattern is only half the story, but the breakout direction and strength define the whole story. During breakout, buyers or sellers put full strength, stop losses get triggered, trapped traders panic, institutions create movements, volume spikes. That's why breakouts usually create powerful moves. Failure, the untold truth of chart patterns. One unique thing about Bulkowski's charts is that he analyzes failures just as deeply as successes, because every pattern can fail, and failed patterns can also make money. For each pattern, the book includes failure rate, failure type, expected move after failure. Bulkowski says, a failed pattern is also a pattern. This is why the opposite move of a failed pattern is often powerful. Volume, the most important tool for confirmation. Bulkowski proved through research that volume confirms breakout quality, protects from fake-outs, shows strength of buyers/sellers, increases trend reliability. High volume breakout equals high probability. Low volume breakout equals high risk of failure. Most reliable patterns, based on Bulkowski's data. Some patterns statistically perform best. Head and shoulders, reversal, cup and handle, ascending triangle, symmetrical triangle, double bottom, bullish flag. These patterns have high probability and reliability. Most unreliable patterns, according to Bulkowski. Patterns with high failure. Descending triangle for upward breakouts. Broadening patterns, too complex. Rounding top, slow performance. Rectangle, frequent fake breakouts. Bulkowski says these require caution. Price target calculation. Bulkowski formula. To calculate the move after breakout, target equals breakout price plus pattern height. Pattern height equals highest price, lowest price. Breakout price equals where price broke the pattern. This formula works across almost all patterns. Throwback and pullback. The hidden trap. Bulkowski uniquely calculated the probability of pullbacks/throwbacks. Throwback, after upward breakout, price dips back. Pullback, after downward breakout, price rises back. These make traders exit early, create false fear, give excellent entry opportunities. Strong patterns commonly show throwback about 60 to 70% of the time. So no need to panic, this is normal behavior. Pattern shape doesn't matter, behavior does. Bulkowski says, perfection doesn't matter. Behavior matters. A pattern may tilt, look imperfect, shift slightly, but its underlying psychology must remain intact. That is true pattern identification. Now friends, we have reached the most interesting section of the book, where Bulkowski explains the most reliable chart patterns in detail. Here, every pattern is not just a drawing, but a combination of psychology, statistics, and probability. Bulkowski says, to understand a pattern, read both price and psychology. Let's go deep. Head and shoulders. The king of trend reversal, one of Bulkowski's most powerful reversal patterns. It forms when buyers get exhausted, sellers slowly take control, reversal pressure builds, 3 peaks. Left shoulder, middle peak, head, tallest. Right shoulder, neckline breakout officially changes trend. Psychology, left shoulder right pointing arrow uptrend pauses. Head right pointing arrow buyers make a final attempt but fail. Right shoulder right pointing arrow buyers are tired, sellers dominate. Performance, very high success rate, strong decline. Throwback probability approximately 65%. Target, subtract pattern height from neckline. Inverse head and shoulders. Bullish reversal king. Strongest sign of bullish reversal. Bulkowski's data. Most reliable bullish reversal pattern. Strong average rise. Low false breakouts. Double top. Danger signal. Price tries twice but fails to break resistance. Performance, moderate to high reliability. Failure occurs when second top is higher. Sharp fall after breakout. Psychology, buyers try but supply wins the second time. Double bottom, strong bullish reversal. 2 bottoms represent buyers' 2 attempts. Higher second bottom right pointing arrow, stronger reversal. Data, high success. Strong upward breakout, pullback common. Triangles, beautiful and powerful patterns. Bulkowski says triangles are continuation patterns but can also reverse. 1. Ascending triangle, flat resistance plus rising lows. Right pointing arrow buyers getting stronger. Stats, very high bullish breakout probability. Strong rise, rare failures. 2. Descending triangle, flat support plus lower highs. Right pointing arrow sellers gaining control. Performance, high bearish breakout probability, but upward breakout creates huge short squeeze. 3. Symmetrical triangle, lower highs plus higher lows. Energy builds right pointing arrow explosive move. Research, breakouts possible both ways. Volume contraction required, breakout leads to strong move. Flags and pennants. The fastest patterns, trend pauses briefly before continuing. Flag, small parallel channel against trend. Performance, fastest continuation pattern. Highest average rise, low failure rate. Pennant, small symmetrical triangle. Research, sharpest moves, favorite pattern of institutions. Cup and handle, rare but golden. Cup equals accumulation. Handle equals profit booking. Breakout equals buyers win. Data, high success. Strong upward move, rare but powerful. Wedges, reversal plus continuation. Rising wedge, bearish. Falling wedge, bullish. Data, falling wedge equals highest success. Rising wedge equals strong failure moves. Broadening patterns. High risk, higher highs plus lower lows right pointing arrow chaos. Research, most unreliable, huge failures. For experienced traders only. Diamond pattern, rare but explosive. Signals reversal. Breakout extremely sharp. Key lesson, patterns equals behavior, not drawings. Bulkowski repeats, price patterns are human psychology footprints. Everything you see in the market, buyers versus sellers, fear versus greed, weakness versus strength, accumulation versus distribution, is hidden inside patterns. Now friends, we have reached that phase of this massive knowledge-filled journey where Bulkowski doesn't just teach charts, he teaches how to read market behavior. This part changes many traders' lives. Let's begin. 1. Why do chart patterns fail? Bulkowski says, not every pattern is perfect. Failures are real learning. Reasons for failure. 1. No volume confirmation. 2. Premature breakouts, false breakouts. 3. Market conditions against the pattern. 4. Structure defects. 5. Entering without confirmation. Bulkowski says wait for confirmation. Always. 2. Pattern confirmation. The golden rule. Breakout plus volume plus closing outside boundary equals real confirmation. This increases success probability many times. 3. Pattern performance tables. Includes success rate, average rise/decline, failure rate. Bulkowski says, trade what performs, not what looks pretty. 4. Breakout entry techniques. Checkmark breakout close entry. Safer but late. Checkmark pullback entry. Most powerful. Checkmark anticipation entry. Only for advanced traders. 5. Exit strategy. Checkmark measured target exit. Checkmark trailing stop exit. Checkmark failure exit. Bulkowski says, never hold a failed pattern. 6. Bull and bear traps. Bull trap, weak volume, long wicks, quick reversal. Bear trap, weak selling pressure, quick upside reversal. Bulkowski says, spot the trap, save a lifetime of losses. 7. Backtesting. Bulkowski analyzed 53,000 trades, tested 500+ charts, spent decades on research. His message: without testing, pattern is just a guess. 8. Real-world trading. 6 steps. 1. Identify pattern. 2. Wait for confirmation. 3. Choose best entry. 4. Apply stop loss. 5. Follow target. 6. Exit on failure. Final message. Bulkowski says, trust chart patterns, but not blindly. Understand their psychology, read their data, and convert them into a disciplined system. This was the deep knowledge journey of Bulkowski's Encyclopedia of Chart Patterns. The market doesn't run on shapes. It runs on psychology, probability, and discipline. Bulkowski taught us, every pattern has its own personality. Every breakout hides trader psychology. Every failure brings a new lesson. Now it's your turn to apply these concepts on charts, identify patterns, and turn trading from guesswork into data, logic, and discipline. If this video felt valuable, like, share, and comment. And for more deep trading psychology, chart analysis, and investment summaries, make sure to subscribe to the channel. I'll see you in the next powerful video. Until then, keep reading charts, stay patient, and keep becoming a disciplined trader. Thank you for watching. Keep learning, keep growing, and trade disciplined.